Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, I'm going to be showing you all how to use the Fibonacci as one of the major tools in looking for high probability trades and also in exiting trade entry opportunities. The Fibonacci is a very important tool in price action trading, and I'm going to be showing you all A to Z on how to use Fibonacci in getting high probability entries and high probability defining exits also. So let's go, guys. Okay, we are going to start by explaining what a Fibonacci is. It's important to note that a Fibonacci is a retracement tool and a Fibonacci is also an extension tool. That is, a Fibonacci can let us know where a retracement might be ending, and a Fibonacci can also allow us to know where an extension might be ending. Okay, so Fibonacci has two uses. So let's go ahead and write it down that a Fibonacci is a retracement tool. A Fibonacci is a retracement tool, and a Fibonacci is also an extension tool. Okay, so this means that you can use the Fibonacci to know where a retracement might be exiting and where what an extension also might also be exiting or ending. So it's very important. Okay, so when it comes to the Fibonacci retracement, we have several levels in the Fibonacci retracement. Okay, so let's go ahead and write that down. That the Fibonacci retracement has several levels. Okay, so what are the levels in the Fibonacci retracement? Okay, we are going to start by explaining what a Fibonacci is. It's important to note that a Fibonacci is a retracement tool and a Fibonacci is also an extension tool. That is, a Fibonacci can let us know where a retracement might be ending, and a Fibonacci can also allow us to know where an extension might be ending. Okay, so Fibonacci has two uses. So let's go ahead and write it down that a Fibonacci is a retracement tool. A Fibonacci is a retracement tool, and a Fibonacci is also an extension tool. Okay, so this means that you can use the Fibonacci to know where a retracement might be exiting and where what an extension also might also be exiting or ending. So it's very important. Okay, so when it comes to the Fibonacci retracement, we have several levels in the Fibonacci retracement. Okay, so let's go ahead and write that down. That the Fibonacci retracement has several levels. Okay, so what are the levels in the Fibonacci retracement? We have the Fibonacci level 23.6, Fibonacci level 23.6, we have the 38.2, we have the 50.0, and the king of them all, we have the 61.8. Okay, so now the question is, why is the Fibonacci 61.8 the king of them all? Okay, this is because the Fibonacci 61.8 is the most sensitive reversal area in the Fibonacci retracement level. Okay, the Fibonacci 61.8, apart from on the charts, can also be found on real life, in plants and all. So the Fibonacci 61.8 level is very, very significant. And it's important to note that the Fibonacci 61.8 level is also known as the golden zone. Okay, so let's go ahead and write that out. That this Fibonacci level is known as the golden zone. Okay, and the 61.8 level should be watched out for whenever you are trading a retracement. This means if you have a trade entry opportunity in a retracement, the maximum you can trade to is the 61.8 Fibonacci level. Okay, so it's important we take note of that. While what the 50.0 is also significant. Okay, there are sometimes that there will be a retracement opportunity and prices may not get to the 61.8. This is because at the 50.0 level, there are multiple areas of support or resistances that could appear. Okay, so what does this mean? This means that if you are trading a retracement and there are lots of support or resistance levels that appear at the 50.0 level, this means you should exit your trade at the 50.0. This means there's a probability that prices will not get to the 61.8. But if you are trading a retracement and there are not multiple areas of support or resistances around the 50.0, then this means you can extend your trade to the golden zone at the 61.8 Fibonacci retracement level. Okay, so these things are very important. While the 38.2 and the 23.6 are not as significant and they are not key reversal areas. Okay, these are not the key levels of the Fibonacci retracement. The key levels are the 50.0 and the 61.8, and I just mentioned the situations or circumstances where the 50.0 becomes more active. Okay, that is when there are multiple areas of support or resistances around the 50.0. If they are not, then just ride your retracement opportunity to the 61.8 without any issues. For the Fibonacci extension levels, we have the Fibonacci level 100.0. We also have the Fibonacci level 161.8. And we also have the Fibonacci level 261.8. Okay, so now what is the most significant level in the Fibonacci extension level? The most significant level is the Fibonacci 100.0. Okay, the Fibonacci 100.0 is the most significant Fibonacci level, and whenever we are picking a trade, the maximum that we exit our trade is the Fibonacci 100.0. Remember that the Fibonacci retracement levels are significant when you are trading a retracement, while the Fibonacci extension levels are significant when you are taking a trade in the direction of trend. Okay, that is when it becomes significant. So if you are trading the direction of trend, the most sensitive level and where we exit our trade is the Fibonacci 100.0. Whenever there's a trade entry opportunity, we exit at the 100.0. We don't go beyond the 100.0 to 161.8 or the 261.8. There are times, however, when prices extend to 161.8 and 261.8. But for us, it's about exiting our trade at the safest exit. We don't want to be in situations where prices get to the 100.0 and we are still holding on to prices thinking it to get to 161.8 only for it to go the other way around. So we want to exit using what? The most important level, that is the Fibonacci 100.0 extension level. How to use a Fibonacci tool? It's important to note that a Fibonacci tool is one of the easiest tools to use once you understand the collaboration of Fibonacci with chart structures. Okay, I've done multiple teachings of chart structures and you all can go and watch some of the videos on chart structures and fractals that I've done. Okay, so how to use a Fibonacci? First of all, if we see prices make bullish structures like this, and we see a break of the bullish structure, what are we going to do? We are going to bring out our Fibonacci level and take it down from the lowest point of the broken fractal right here to the highest point of the broken fractal right here at this point. Okay, if the opportunity is a retracement, that is what the break of structure right here is a retracement, then what are we going to do? We are going to sell to at maximum the 61.8 of the broken fractal. Okay, like we said, in a retracement, the 61.8 is the most sensitive. Okay, so if it's a retracement, we're going to sell to at maximum the 61.8. Okay, while if the opportunity is in the direction of trend, what are we going to do? We are going to sell to the 100.0 Fibonacci level of the broken fractal, which is going to appear somewhere around here. That's the lowest point of the broken fractal, is always the 100.0. Okay, so it's important that we take note of this in regards to picking a trade entry opportunity using the Fibonacci. And like I said, the Fibonacci is one of the most important tools to use. Okay, so now let's go ahead and draw the Fibonacci when there is a break of a bearish structure. Okay, so now let's take all of this out. If there's a break of a bearish structure is also similar use, okay, that is what this time around we can see prices make bearish structures like this, okay, and we can see prices break structure. Okay, if this happens, what are you going to do? Bring out your Fibonacci from the highest point of the broken fractal right here to the lowest point of the broken fractal right here. If it's a retracement opportunity, that is, this buy trade is a retracement, exit at maximum the 61.8 of the broken fractal, which is going to be somewhere around here. While if the opportunity is in the direction of trend, exit at the 100.0 Fibonacci level of the broken fractal, which is going to be somewhere around here. In this case, 100.0 is the highest point of the broken fractal. Okay, so the Fibonacci is a very simple tool to use, and it's very, very easy to use and to understand. Okay, we just learned about how to use the Fibonacci for exiting prices. That is, if the opportunity is a retracement exit at the 61.8 Fibonacci level, while if the opportunity is in the direction of trend, exit at the 100.0 Fibonacci level. Now we are going to come to how to use Fibonacci for entry. It's important to note that as chart structure traders, we know that what after a break of structure, prices usually goes for a natural 61.8 retracement. Okay, that is, for example, if we see prices makes clear bearish structure like this, and prices comes and breaks the structure. Okay, this is where the structure got broken. A lower high got broken at this point. Okay, by prices creating what an higher high. Okay, so now we know that after a break of structure, instead of prices heading straight to take profit at either the 61.8 or the 100.0, after a break of structure, prices usually goes back for a natural 61.8 retracement. Usually prices goes back, in this case, to grab more bulls and take the bulls up to take profits. Okay, prices doesn't do this 100% of the time. It does this about 80 to 90% of the times. Okay, so now how can we be able to apply the Fibonacci for our entry? In this case, you bring out your Fibonacci from the lowest point of the broken fractal right here to the highest point of rejection right here. Then your 61.8 is going to be around here. This means if we are looking for an entry using the Fibonacci, we use the Fibonacci 61.8. Okay, so in this case, what are we going to do? We are going to pick our buy trade pinpoint at 61.8. Okay, and we're going to buy to take profit using Fibonacci again as what our take profit at the other 61.8, which would apply or show around here. Then if it's in the direction of trend, we'll take our exit at the 100.0, which would appear around here. Okay, so now let's go ahead and do the same thing for the break of a bullish structure. Okay, so it's basically this exact same thing. If we see prices make clear bullish structures like this, we know that after a break of structure, about 80 to 90% of the time, what does prices do? It goes back for a natural 61.8 retracement. Okay, that is, we're going to bring out our Fibonacci from the highest point of the broken fractal right here to the lowest point of rejection. You are going to get your 61.8 Fibonacci level around here. Okay, so what are we going to do? Okay, in this case, we're going to take advantage of our knowledge of chart structure and Fibonacci and what? And sell pinpoints at 61.8, put our stop loss here, and what? And sell down to the other 61.8, which will appear around there if it's a retracement, or sell to as low as this point right here, which is the 100.0 Fibonacci level if we are trading the direction of trend. Okay, so now let's go on to the real life chart to show you how we can be able to apply all of this knowledge in a real life chart. In this example, we can see prices make clear bullish structures right here. These are clear bullish structures within the confines of this fractal. Then this higher low got broken right here. This was where the clear break of structure happened within the confines of this fractal. This means to get my take profit, what am I going to do? I'm going to bring out my Fibonacci from the lowest point of the broken fractal and take it up to the highest point of the broken fractal. Okay, and clearly in this point, we can see prices get to the 61.8 right here. Okay, this is the take profit at the 61.8 here because this opportunity is a retracement. I've also done another teaching on how to know if prices is a retracement or in the direction of trend, and you can go ahead and see the video. Okay, so we can see that prices got to take profit here, pinpoint at the 61.8. Okay, so how would we have gotten our entry? We would have gotten our entry using multiple of our knowledge. That is what? Okay, a break of structure has clearly happened. Okay, we know that we can sell pinpoints at the break of structure, put our stop loss at the high, and sell to 61.8 right here. Okay, but we also know for a fact that when a break of structure happens, what happens? Prices goes back for a natural 61.8 retracement. How do we get our 61.8? We bring out our Fibonacci from the highest point of the broken fractal to the lowest point of rejection right here. Okay, so we can see clearly that what prices came back to the 61.8. We can take some of these drawings out to see it clearly. Okay, so this is the highest point of the broken fractal, lowest point of rejection. Prices came back to 61.8. And it's also important to note that 61 is a zone and not a pinpoint area. Okay, so when prices goes above 61.8, it does not matter. It is going to correct itself back into 61.8. Okay, so what I'm going to do, we are just going to what, when the break of structure happened, wait for a natural 61.8 retracement. So we'll sell pinpoint at 61.8. It doesn't really matter if prices eventually goes above 61.8. It's going to correct itself back inside. Okay, so we are going to sell pinpoint at 61 point and put our stop loss at the high right here, at this high here, and in this case sell to the other 61.8 right here. Okay, the other 61.8, like we know, bring out our Fibonacci from the lowest point of the broken fractal and take it up to the highest point of the broken fractal. We can all clearly see that prices clearly got to the 61.8 for take profit. Okay, in this case you would have gotten some massive risk reward on this trade. Let's go ahead and just do a brief calculation. You're selling here with your stop loss at a high here of about 80 pips, and you're selling for about 275 pips. This is about 1:3 plus risk reward on this trade. Okay, so let's go ahead and search for other examples. This time around, it's an example in the direction of trend. We can see prices make all of this push, exhaustion right here. Then prices made the push and prices broke the structure right here. You can clearly see that the last lower high was broken right here. Okay, so in this case, using Fibonacci for an entry, what are we going to do? We are going to wait for prices to come back for a natural 61-point retracement, and using Fibonacci for an exit. This time around, we know it's in the direction of trend. We are going to bring out our Fibonacci from the highest point of the broken fractal to the lowest point of the broken fractal and exit the trade at the 100.0. Okay, so now for take profits, we'll bring out our Fibonacci, highest point of the broken fractal right here to the lowest point of the broken fractal down here. Okay, so our take profit is clearly the 100.0. That is the highest point of the broken fractal. This is our take profit. Okay, this was a clear structural break here. We can see prices make push, exhaustion, push right here, clear break of structure. The last lower high was broken right here, giving us our entry. We can buy pinpoints, or we can decide to use what, the Fibonacci for our entry. That is, wait for prices to come back for a natural 61-point retracement. Okay, so now let's go ahead and show how to use the Fibonacci for entry. Bring your Fibonacci out from the lowest point of the broken fractal right here, take it out to the highest point of rejection right here. Okay, so this was where prices went, broke the clear structure at this point, went back for a natural 61-point retracement and headed straight to take profit. So if you were picking this trade at 61, you would have bought at 61-point pinpoints. Okay, put your stop loss at the low of about 36 pips and take profits about 231 pips. This is probably like a 1:6 or 1:7 risk reward by just understanding and trading within the Fibonacci levels. Let's go ahead and look for another example. Example in a retracement. Okay, we can see prices make push, exhaustion, push, exhaustion, push, exhaustion within the confines of this fractal push, and this was where the last lower high was broken at this point. Okay, so when prices broke structure, we know that what, between 80 to 90% of times after breaking structure, what does prices do? It comes back for a natural 61-point retracement. Okay, and for our exit, we know that because this opportunity is a retracement, our exit is going to be at the 61.8. Okay, so let's start by showing our exits. We'll bring out our Fibonacci from the highest point of the broken fractal to the lowest point of the broken fractal at this point. The exit is clear at the 61.8 right here. Okay, so now how are we going to show our entry using the Fibonacci 61.8? After the break of structure, instead of prices coming directly to to the 61.8. It went a little bit above, played around a bit before coming back to 61.8. Okay, so how are we going to do this? We're going to bring out our Fibonacci from the lowest point of the broken fractal right here to the highest point of rejection right here. Okay, so we can see that prices played around a bit only to come back for a natural 61.8 retracement before heading to take profit. So in this case, if you had wanted to pick the trade, you could buy pinpoint at 61.8, put the stop loss at the low of about 148 pips, and right to the other 61.8 right here of about 412 pips. Probably this would give you maybe a 1:2 plus or 1:3 risk reward. So this happens on multiple examples of how you can be able to use Fibonacci for an entry and for an exit. And if you apply this, your success is 100% guaranteed. Okay, so if you want to learn more, guys, you want to learn more about how to apply Fibonacci or about price action trading, I have a mentorship program link in the description below, where I will take you by the hand through the understanding and the mastery of every single aspect of price action trading. See you in the mentorship, guys.